Today is the most important day of the Fed's existence in 2025. The markets are basically screaming rate cut at 25 basis points. Will we get a surprise 50? And really, what comes next with the SCP on deck? What is the Fed actually looking at? Political pressure is at an all-time high. Gold just hit a new record high, and a brand new governor is in the room. So this is the turning point. Here's exactly what I'll be watching and how I'll be trading it. Yields were a little bit muted going into the Fed meeting today. And again, we're looking in the next 2 hours of Jerome was going to come out and we're going to get an SEP number. However, I would like to bring your attention to some other things that are going on in the market, which is a little cause for concern for the Fed. Well, number one, net short positions were 167,000. And this week, we just basically went a straight line up on a Monday. We actually didn't get a weekly breakdown. We just simply got a gap and go on the weekly chart. We covered this in the weekend deep dive. So again, if you guys want to know these levels, how to play them, we put it in that video. I'll also have it at the end of this video. So again, make sure you guys subscribe. Thank you all so much for all those that do. But straight line up, is it setting up for markets to be in an overpriced, overbought situation? Again, I'll make the argument that the turning point was basically back in April, and I think that this is going to be a turning point for the country. I have lost all faith in trying to convince the bears and people on the left that anything at this point, because again, it's becoming difficult because the bears are just simply just like, why? Just why are you shorting the market? Again, it's like, it's okay to be wrong. It's not okay to stay wrong. And the left and the bears probably have something very much in common of just bashing your head into a wall and apparently liking that in any way, shape, or form. But again, S&P crossing 660, the NASDAQ actually breaking to a new all-time high and saying, F your shorts. And yeah, that was... It was great. It was absolutely great. And coincidentally, the VIX is actually heading higher into the Fed meeting, resulting in one of two really curious scenarios. And I'll actually tell you guys why the VIX may be spiking, which is mainly what's going on in the Fed emergency rate facility. I track this a little bit over time just to see what things are going on. But we actually had a spike on the 15th. This means that someone was in a little bit of panic, had to come to the rescue. That's $1.5 billion that had to be pushed in liquidity overnight to maybe a bank or some STIG that needed some money. We've seen this trend basically be like linear, except when we had the big volatility spike back. That was approximately June 30th. But we really haven't seen this facility be used in any way, shape, or form. It stays very low going into like just petering up and down. So in the grand scheme of things, this spike isn't significant, but it is a blip on the radar. The last time we had a spike like this was around the October timeframe of 2024, right when the Fed actually ignited one of the biggest rallies in the stock market and just kept pumping, right? Heading into August, we were going down. The Fed came in, rescued it. So that's what I'm expecting for this Fed meeting. If we go to the expectations, again, 96% chance that a 25 basis point cut is priced in, a 4% chance of a 50. I don't think you're going to get a 50, but it's going to be very interesting with the SEP. The SEP, for all those that don't know, is the projection for the next interest rate year and 2 years. So previously 3.6 for a 1 year projection, which was Q3 of next year. So we're actually going to get Q3 data for next year. So what is this number going to be at? Because the Fed is thinking 3.6 federal funds rate next year. Again, the markets are thinking completely different. If we go to the Fed Watch tool and we go to September, we're looking at a consensus being more around a 3. So we're expecting 50 basis points lower on that number. So again, the 3.6 is what was last time. We're expecting 3, maybe a 2.75. That would be extremely bullish. And then how the rest line up. Because right now, this latest forecast that was there was pricing in basically very moderate rate cuts. We didn't see the weakening in the jobs market, which led the Fed to basically go from not cutting this year to now guarantee 3 cuts this year based on the CME watch tool. If we go to December, we can see 3 rate cuts priced in exactly at 70%. Only 24% for the 2 rate cuts and basically 1.6 only for 1 rate cut, essentially meaning that 3 rate cuts are on the table, and you have the same probability of a debate between 3 and 2. Let's see what Jerome Powell says today, but really truly, I think the SCP is going to be one of the things to watch. And the really cool thing is we actually get it and we're going to have the knee-jerk move. Do not expect, or I would not recommend to have positions on during this time because it's just going to be a single directional move. I do not foresee this thing just going in like up, down, and sideways. I think we're going to pick a direction and we're just going to keep going, right? All Jerome Powell can do is tamp down the momentum or ignite it even further. And again, just looking at the market and what it's been doing, we sold off into today, yesterday, and we're still at a weekly higher high. So just to put in perspective, the bears would have to bring you down nearly 2% in order to break the pattern. And that is to get back to break even after last week where we just creamed their shorts like no tomorrow. Again, they've been holding this position since we were back down here. So they're suffering between 5% loss right now. And any future squeeze is just going to be an insane squeeze. So the market there's a lot of money to be taken from one side. And when that happens, traditionally, the market says, thank you for your donation, come again. Bitcoin looking like it wants to hold this 50-day moving average. We're going to be talking about a couple stocks in just a moment that I'm looking that are exactly like Bitcoin. This is setting up to basically be a cup and handle on Bitcoin, inverse head and shoulders, however you want to call it. But Bitcoin 125, here we come in a very rapid moment, and the Fed could be the one to ignite it. So if you haven't gone in on that rally, make sure you check it out. But if we look at stocks like, for example, Microsoft, getting right to that 50-day moving average, breaking down below, but this could be setting up the massive rally that's heading into today. We also have companies like Meta, got back above 50, looking to challenge its new all-time high. Make sure you guys check that out. Goog kind of coming down a little bit here. Again, look for 245 on Goog. That's where I would be looking personally. Kind of similar to how AVGO had their basically gap and go. And speaking of AVGO, we basically formed a gap and go, and we're about to do it again here. So make sure you get in on AVGO before the rally stops. And if, like, let's say you don't want to get in AVGO, NVIDIA 50-day moving average, everyone's going to be looking and kicking themselves that they should about the 50-day moving average bounce, holding it beautifully within 4 cents. Where do you think NVIDIA is going? Throw it in the comment section down below. I'm really curious to hear your thoughts. But again, the S&P and the NASDAQ are just basically crushing the bears out there. The broader market is rallying, and companies like home builders are probably at an extreme discount, similar to like Lennar, is why Warren Buffett's buying them. We just had a golden cross on Lennar. DR Horton, which is one of the biggest builders in the country, is just looking like it has a nice little pullback. If you want to get in and snipe this company at 171, awesome valuation right now. You also have other companies like, I talk about Apple, or I crap talk Apple a lot, but it is looking like it wants to challenge these previous all-time highs here, kind of forming this massive cup and handle here. Again, the market is just setting up to be one of those like massive bullish turning points that everyone looks back at and is very similar. We also had people commenting like, oh, the 2008-7 and all this. I'm like, history doesn't repeat itself. It rhymes. It doesn't repeat exactly, but again, we have to look at the yield curve, and the yield curve is basically still doing loop-de-loops, not really uninverting, not crashing down below. How's it going to react? Our yield's basically going to come down in a slow, moderate pace. I'm personally thinking, and this is just my personal thoughts on all of this, is if we look at the 10-year, we can clearly see that we're forming a base here in one of two scenarios. We basically rocket back up to about 4.3%, or we crash down to 3.75 on the 10-year. I personally think Jerome Powell is going to send us lower because it would basically be a hand grenade going off in the Fed's face. And I think there's going to be a lot of turmoil due to the new Fed members, due to some of them already dissenting, due to the latest jobs market. I think you're going to see a very scattered opinion on the 1 year with a more of a consensus on the 2 and 3 year projection for the federal funds rate. And I do believe the market's going to interpret that as a bullish thing, and the markets are basically going to rally. Some of the biggest asset classes like Palantir, that's basically leveling out right here, forming that cup and handle right here. Again, I keep giving you guys all these call outs for free, and all we ask is just subscribe and like the video down below. Whereas the broader market like China, for example, has been doing pretty well. So if the Chinese stock market is doing pretty well and we're against them, as some would say, and the Dixie is just coming back down to moderate levels that it has been at for over a decade, and everyone's saying the dollar is de-dollarizing, I don't see it. There's no data to interpret that, and I would challenge anyone that has evidence of such de-dollarization or a global crash or a global shortage, please throw down in the comments below, because please, for the love of God, Do not be like these people over here that are shorting the market. Been there, done that. No, thank you. Thank you for transferring the money for the net speculative positions, 175, 30,000. And again, remember, it's okay to be wrong. It's not okay to stay wrong. I've been there. I've shorted the market when the market was going up. I learned my lesson, and now I just basically go with the flow. And this is the making of the most hated V-shaped recovery in existence. And also, it's very interesting how all these people that are investing in AI are telling you there's an AI bubble, Sam Altman and all them. So if you guys want to know more about how the market works and how everything is, check out the latest 2 videos over here, along with Discord on the top left. Thank you all so much for watching, and I'll see you tonight for the live stream.